Hello, Internet. How are you again? Good to see you. So, today I'm talking about trading VEPS to know the future. Well, what does that mean? Well, if you've been watching my channel and occasionally seen me talk about trading with the VEPS, which is volatility, entropy, probability, and statistics, you'll know that one of the great things about trading the VEPS is that you can use it to essentially know certain things about the future. What is it you can know about the future? Well, there's a variety of things you can know. Namely, are the probable moves of the means, what direction they will take, and at its fundamental core, what are the probable tendencies that volatility and its correlation to price action will tell you about the current and future price action, as well as what can you tell from entropy that can indicate to you about the future by knowing whether or not the asset is on a random walk, which it is most of the time in a random market, which markets are usually, or if it's in a trending move, and the correlation of that random walk or trending move to the entropy power percent or the Shannon entropy percent. Either one of those will tell you an accurate tendency of the asset's probable moves to the upside, the downside, or sideways, just as volatility will. And the tendencies are remarkably the same. So, for example, if volatility and correlation are completely contracted, and all the volatility and the correlation to the price action can do is expand, and if that's what they do at roughly the same time, then generally speaking, price goes up. Same thing with the entropy. For example, if the entropy is fully contracted and on a random walk, and the correlation of the entropy power percentile, for example, is fully contracted, and they both start to expand positively, and the entropy heads into a trending move, and the correlation increases or expands positively, then price can go up. And there's about 6 different tendencies that match basically on volatility and entropy. And if you learn them, you can tell precisely what the probable move is for the volatility and the entropy. Just like 3 ducks in a row. Yeah. 1 female and 2 males chasing it. Chasing her, I should say. Anyway, so what else can you tell about the future when you're trading with the VEPS? Well, as I indicated, you can tell a lot about the mean and the future mean, or specifically the direction of the reverse mean of log returns, because we at Alpha Trading have figured out specifically how the RMLR moves in the future. A little discovery we made, maybe it's not so little, but a discovery we made about 1.5 years ago or so, in around April or May of 2022. And since then, we've demonstrated time and again, practically without fail, on any time frame on any asset that you can tell the future RMLR, specifically the future direction of the RMLR. And we even have an indicator for it called the RMLR. And why is that useful? Because by knowing the future direction of the RMLR, you can gauge whether or not the move on the asset is likely to go up, down, or sideways, and you can tell whether or not a move is in continuance or in mean reversion. You can tell whether or not an asset is likely to hang around the mean, move away from it, or mean revert to it, since that's essentially what assets do. They are either moving away from the mean or they are mean reverting. Price merely follows what is happening with the returns. And what is happening with the returns is determined by the standard deviation of returns, otherwise known as volatility. So again, the volatility and the correlation of the price action can show you precisely the tendency of the probability of the asset moving up, down, or sideways. Entropy can tell you the same thing when you look at its correlation as well. And tools like the RMLR can show you the extremely probable direction of the future RMLR. And that can be used for gauging when the asset is going to move away from the mean or when a mean reversion is in play. How accurate are these tools? Well, they're extremely accurate. And dare I say, statistically, well over 99% accurate. And I say that because, well, we measured it. And on every asset that we measure, it does do what it says it's going to do. Well over 99% of the time. Now, are there cases where it does not do what it's supposed to do? Well, supposed to. What it's probably going to do? Yes. There are. Of randomness. Geometric Brownian motion. So there are cases in which extreme outlier moves or random moves will do the opposite of what you think it would do. However, they tend to revert to the norm fairly quickly. The history of the asset, etc. But generally speaking, since price action follows the returns, and returns are determined by the standard deviation of returns, volatility, and the direction that it moves, which is determined by the volatility and the correlation, and the asset is either in a random walk or a trending move, and you can tell which is which, at which time which the asset is in one or the other, well, it makes trading a lot simpler when you simply know how to read the information provided. Why? Well, because the VEPS indicators provide you with leading information, not lagging information. What kind of information do you get from traditional technical analysis? With moving averages, simple moving averages, exponential moving averages, Fibonacci's, candle patterns, all this kind of stuff, triangles, wedges, whatever, you get lagging information. It's only telling you what the asset has done and tells you literally nothing about the probability of the current and future price action, let alone the current and future returns, because they simply don't even calculate that. Normal, standard, traditional TA tools don't even have returns calculators, volatility calculators, entropy calculators, anything of the sort. So you're left with tools that are lagging and that have been outdated since effectively the 1970s, and you're trading against the quote-unquote smart money, who consider retail traders to be the dumb money. And they say that because the retail traders are using poor information that specifically has been shoveled down onto them by the smart money and all of the people in between the smart money and the dumb money. And as a result, more than 99% of traders who are retail traders get wrecked within a few months. Whereas the smart money keep making money hand over fist, precisely because they are using the leading information, the very same kind of leading information that we use at Alpha Trading. So what should that tell you? Well, it should be a wake-up call to you, and you might want to consider learning how to use leading information. And the good news is you can learn entirely for free. We don't charge you a penny. We don't want your money. And frankly, the more people that don't use it, well, the better for us, because the easier it makes it to have more liquidity on the other side of our trades. But we would rather see more traders learn how to trade better. And also, statistically, because most people are simply unable to follow the 3 golden rules of trading, which are to take profit early and often, limit your loss, meaning if a trade is going against you, to get out quickly, and to not be emotionally attached to your trades. And since most people are unable to do those things, the result is that they end up losing money. And so even if most people were to suddenly embrace trading with the VEPS, guess what? The majority would still lose their money, not because they're not getting good information, but because A, they either don't know how to read it properly because they haven't bothered to learn, and or B, because they're not willing to actually trust the indicators that are giving them the proper leading information, because they've been so poisoned by the toxic and terrible quality of information from traditional TA that they'll counter trade themselves no matter what tools they're using, or C, they're going to make poor decisions about getting in and out of trades because they're simply unable to not trade emotionally, and they're going to do all these ridiculous things to convince themselves to remain in bad trades and to get out of good trades, right? Or to not enter good trades at all, and then stay out until the trades are no longer good, and then jump on what they think is the bandwagon when in fact the move is getting ready to flatten off or turn around. So in the end, even if everyone learned how to trade the VEPS, it would still be profitable for those who actually learn how to trade it properly and who actually are able to carry out what the information is telling them to do. Unfortunately, for those of you who are willing to learn that and who are willing to do what you're supposed to do according to the VEPS, well, these are the salad days. And by that I mean these are very green days full of ripe pickings for people who do actually learn how to use the VEPS and who do actually know how and do carry out trades according to what the information is telling them. Because again, information is not biased. Information is pure math, and you don't need a bias. You don't need an emotional attachment. In fact, those things are specifically going to work against you. So you should avoid at all costs being emotionally attached to trades. You should trade things you don't care about. You should use only the leading information that is telling you whether or not the asset is likely to go up, down, or sideways. And you should most effectively trade on low time frames when possible, because the more you trade on lower time frames, the more probability you have of filling up little buckets of liquidity over and over again during the trading day. But of course, trading is not for everyone, and it's obviously up to every individual to learn how to trade and realize that they have to manage their own risk, and that there is risk in trading, and that you are far more likely to lose money than to make money, especially if you don't know how to trade. If you haven't bothered to learn how to trade properly with something like the VEPS, you really don't have a good chance of making money as a trader. And I'm not saying that to dissuade you from trading. I'm saying that to encourage people to learn how to trade properly by whatever means you find to work the best. Now, hey, this isn't to diss Voodoo TA in the sense of if that works for you and you like it, hey, enjoy. But statistically speaking, the overwhelming majority, more than 99% of traders, it is factually proven, lose money when trading with traditional TA. That means they get wrecked within a few months. And that's exactly the way the exchanges and the smart money want that to be. Because they keep getting to recycle fresh blood into the industry. And as long as they can do that and keep the charade going, that they're giving so-called good information to traders with tools like SMA or EMA, the longer they can fool people and take their money, well, the easier they are doing what they do, the easier they are at doing what they do, and happier they are doing what they're doing, even if it costs the average retail trader all their liquidity. Personally, we find that objectionable at Alpha Trading. And so we've built tools for ourselves that we use because we're sick of that garbage. And we want the average retail trader to have that same power. And that's why we give away tools that let you learn for free, including indicators and charts and education, including written education, videos, live chats, live streams, etc. That way you can actually learn for free without spending a penny or even a Satoshi on learning how to trade properly. So, that said, happy trading. Talk to you later. Bye-bye.